Hello, everybody. My name is Brett Taylor. I'm with TransUnion, formerly known as Faction Trust, and I'm here to talk to you about a couple things today, 3 things in particular. So we just rolled out our latest and greatest credit risk underwriting score. And then after many years of conversation with TransUnion, in January, we rolled out our TrueVision Bank Score. Then I want to talk about lead validation. So there's the 3 things I want to talk about. One of the things that I hear from lenders all the time is, how do I say yes to more consumers while mitigating my risk? The second piece of it is, how do I, in real time, look at the consumer's bank account activity and their payments information? How do I assess that ahead of any of the IBV solutions that we have? And the third piece is, how do I increase my conversion rate? How do I increase my contactability for consumers? And so those are the 3 topics I'm going to talk about today. First one is our version 12 of our scorecard. So since I've been at Fact Trust for 14 years, every about 18 months, we revalidate our scorecards. This is the 12th generation of our scorecards. This is kind of what the data that's incorporated in there. This should not be a shocker for anybody. So the first, we have inquiry and velocity data. That's all comes in from the applications that come into our database. Low performance. Low performance is obviously indicative of how a consumer is going to perform in the future, is how they've performed in the past. And lastly, their stability metrics. As we all know in this space, the consumer's contact information changes on a very frequent basis. Their phone numbers, their email addresses, their incomes, their employment, all of those things. So we track all those in our attribute set. Then we've partnered that with the traditional credit attributes coming out of TransUnion, as well as the 30-month trended data coming out of the TrueVision suite. The overlap, well, we noticed when we did an analysis of the database, the overlap between the 2 databases is about 97%. Consumers have credit cards, they have auto loans, they have different products on the TransUnion side. So in order to look at a holistic picture of the consumer and their profiles, we've incorporated both data assets. So in our version 11 scorecard, we had 212 attributes. We've moved to 570 attributes on the alternative credit attribute side. Within some of the newest additions that we have is, are they storefront? Are they online? Are they payday? Or is it an installment? What the type of product they have? What there is there a first payment default on the consumer and they have a good loan, right? So like obviously we're looking at loans and performance and things like that, but first payment default doesn't mean the consumer actually defaulted on the loan. That just means they missed their first payment. So we're looking to incorporate those types of things. And then on the traditional attribute side, there's 415 attributes specifically, but you're looking at traditional loan inquiries of the consumer, as well as 30 months of their trended performance and their contactability stability metrics. And what I can tell you is on this side of the house, a lot of lenders on the prime side look at credit lead utilization and their debt load. 90%, they probably won't touch them. But in this space, if they're making their payments and every month their aggregate excess payment continues to go down and they're managing their debt, and that tells me that's a good consumer for this space because they're managing their outstanding debt that they have. This is a view of the traditional credit attributes. So as I mentioned, 90% of revolving credit. They pay their auto loans on time. They have $2,000 open to buy, meaning they have aggregate liquid access to cash. And so from that standpoint, it's very relevant to look at the consumer in both footprints. And then this is a slide that talks about the lift between V11 and V12. So as you can see, there's significant lift between the 2. We have multiple dependent variables built across different data sets. So you look at 6 months, 30 days past due in 6 months, or 30 days past due in 12 months. One of the things we've invested pretty heavily over the last 2 years is a migration of technology. So TransUnion has a lot of really interesting fraud tools and different data assets that we haven't been able to leverage on the Fact Trust side over the years. One of them is custom model building. And so as we bring on these consumers, these are obviously generic scorecards, and everybody in the space manages risk differently. They look at different success metrics, whether it's profitability, whether it's aggregate excess payment, whether it's first payment default. And so what we can do with our new OneTrue migration is we can develop new scorecards in as little as 3 to 4 weeks that are customized on your data set and deliver them in real time via our platform. One of the things I'll note is all 3 solutions that we're talking about today will be available on the LendSuite platform near future. We're in the process of finalizing some partnership stuff. So that's exciting. The second piece we're going to talk about is the alternative bank score. So the idea behind this is it's orthogonal data, meaning it operates independently from the risk score. So you can place this anywhere in the waterfall that you want. It's retroable. It looks at payment data, bank behavior data. It looks at velocity. It looks at amount of payments. It looks at NSFs. It looks at a number of different assets from the consumer that's reported and third party. from that standpoint, we look at it covers blind spots, right? The question here is I've sat in a number of presentations. They're talking about the bank account, right? So we've got credit risk that you're looking at, which is loan performance data, as well as your banking performance data. All this is done up front. It's retroable, and you can pair this at any point in time in the waterfall that you want based on your needs and your wants. This looks at, this is just kind of some use cases. So we look at consumer bank behavior, activities, and it gives you a more holistic view because these consumers tend to change their bank accounts more frequently. They tend to close their bank accounts. They tend to do a bunch of different things. This is, as I mentioned, this is a standalone solution that can be used to augment your current underwriting solution. So this can be done outside of your credit risk because the idea here is that we're trying to expand your buy box. Right? Lenders look at this and they look at risk and they look at cutting out this stuff. This is an FCRA solution that should allow you to bring in more customers into your underwriting waterfall and approve more loans because ultimately what we're looking is cost per funded. And so if we're able to look at the consumers and bring people in that otherwise we would have denied from a borderline risk score, this should allow you to do that. The last piece I'm going to cover today is something I'm very excited about. So TU a couple of years ago bought a company called Neustar. And one of the Neustar is contactability data. It allows us to be able to go in. They're used in call centers primarily. It's used on media profiles. And we have exclusive relationships with AT&T. We have relationships with T-Mobile, and we have relationships with Verizon. And this solution, as I've designed it, is a lead validation solution. It's designed to go into the top of the waterfall. And basically the idea here is the number one reason I hear from lenders is why they can't convert loans. They can't get them on the phone. The second reason is they have other offers in front of them. But this is one of the main causes that I've heard about. And so basically what this does is this takes a look at the application and it verifies the phone number and it verifies the email in the application as it comes in at the top of the waterfall, which tells you you can in fact contact this consumer. And as you go down the score, the rating score, you can escalate them into different channels. You can update the information. There's different things you can do in your call center. But if you're a lender who auto approves, this is absolutely a solution that you should be looking at the top of your waterfall because it definitely could tell you that the consumer, you can get them on the phone and you can contact them, which is huge. This allows you to effectively look at your lead strategy and your approach on how you're purchasing applications and basically rank order the consumer because the score is from it's an A to an E rating, right? So A is this is Brett Taylor's phone and this is in his email. An E rating is this is a burner phone. You probably shouldn't look at it, right? And everything in between. This is retroable, and this is a use case for both lead validation and account management. So you can leverage this in your call center as well, and you can also use it to update most recent contact information for a consumer because as we know, these folks like to change their cell phone numbers and their contact information pretty frequently. So if you have good information going in and then you're looking to react to the consumer, but you can't get them on the phone, we can update that in your call center. So these are the two different use cases that we're looking at here. One of the things I've been working with our analytics team is to be able to tell a story that is all inclusive. So we're looking at lead validation, the bank risk score, and the V12 score. And we can wrap all of that into one waterfall that allows you to be able to move from the least expensive to the most expensive in terms of your data assets. The idea here is we obviously are mitigating your risk. We've been in that business for a long time, but how do you fund more loans by expanding your buy box? How do you say yes more often, right? How do you mitigate your risk? And how do you look at other data sources in real time to be able to say, to fund more applications? Ultimately, that's the name of the game for us. We want to validate the leads that are coming in and we want to put dollars on the street. So that's, thank you.